Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for Monday, September 15th, 2014. First of all, welcome to the new website. As you can clearly see, it's very dynamic, user-friendly, and several new enhancements to make it more subscriber friendly are all on the way. Feel free to navigate through the website. Everything is laid out very clearly, and I believe that you all will find this a heck of a lot more helpful and use of access, and also visually appealing to the eyes as we continue to make improvements. So let me make good use of today's time. There's been, the market's been absolutely intensely volatile. We all know that, and specifically on the Nasdaq side. So let me make good use of time on these videocasts to go ahead and explain what I see might be going on. To nobody's surprise, we have had a couple of very rough days on the Nasdaq high tech, high beta momentum side, primarily due to the Alibaba IPO effect. In my humble opinion, money is being released, as we all know, by selling some of the high beta winners, high multiple stocks, and especially the higher priced ones on a dollar-to-dollar basis. They tend to be very lucrative to sell. And money is being put aside to go ahead and for the settlement of the BABA or Alibaba IPO this coming Friday. I believe the number has been moved up to around $66 per share. So obviously, and the book is full. The IPO book is, I believe, closing tomorrow, and I think they have enough demand to have a strong IPO. Saying all that, let's jump back on the indices and do a quick analysis of what I think might be going on. Here is a chart of the Dow Jones Industrial Average. This is the longer term one that I've shown several times, going back to November of 2012. A very important point of reminder for everyone. If you study my previous videocast from a few weeks ago, or even 2 weeks ago, you clearly see that I had marked September 8th. I repeat again, September 8th as a date when the market has a short-term peak. Well, it did, exactly to that date. That was based on day count. That was based on the technicals that I could see on my charts, and you all should go ahead and review those particular videocasts to get a full understanding of why September 8th was the day we peaked. Whichever the case, it's been a week since then, and now at this point, the market on a short-term basis is significantly oversold. Well, in some cases it is, and individual stocks, in some cases, and specifically on the Nasdaq tech sector, are again technically very oversold. So a short-term bounce is highly likely as we proceed through the week, and given all the barrage of political, macro global economic events that are due, as well as the Fed meeting rate decisions, and their announcements this Wednesday, I believe that overall, being a monthly options expiration week going into Friday, we should have through this turbulent, volatile next couple of days, we should have a higher finish to the market going into Friday. It kind of makes sense if you think about it, because Alibaba's coming on Friday. I don't think that the powers that be, the Goldman Sachs included, want a market crash prior to the Alibaba IPO to dampen sentiment in that particular one, especially from retail investors who are looking to get into it. So saying all that, here's a chart of the Dow Jones Industrial Average. This is a longer term chart. It's clearly marked. As you can see, if you look at this chart quickly and unemotionally, very hard to do, but let's try doing that. I've had years of practice in trying to be robotic in my trading, and even then it's tough. You can see that really no damage has been done yet. We have the 34 and the 50. We bounced. I'm going to zoom in a second. You can clearly see that the 34 and the 50 are, they're not uptrending. They're kind of starting to flatten a little bit, if you see that. The orange being the 34 moving average, the red being the 50-day moving average. But you can clearly see that this could be construed as a consolidation flag, and okay, a consolidation flag, which is considered to be a bullish formation, unless we break through the lower Bollinger and acceleration band at around 16,777 or thereabouts, 16,700, in which case we're going to fall into the 16,600 range. So we have, let's say we have another 400 points of a cushion that's left before this whole trend starts to turn down. And that's really, what I believe most probably will be occurring in the month of October, after this mini correction is over with, in September. So, and in between, if you look at the Bollingers and stuff, let me zoom in now a little bit more. Well, I'll do that in a second. Then we're looking at around 17,300. And I think in one of my longer term charts, I had 17,500 as a peak in the market, going into October. So, let's look at some pattern symmetries here. Let me get my drawing tool out. This was the January to February, then a corrective pullback, and then we made a new high. Okay, so I've shown this before, so I'll show it again. This pattern, I believe, is following exactly the same routine. Okay, I've said it a few times, and I've said it over the years. Every crisis is the same for different reasons. So this one is no different. So we have a correction here, where we come down and we tested the 200. This is in July, August. Then we moved up, and now we're doing this. And once we can come down as low as the lower Bollinger at around 16,800 or around there, whatever the case. It's possible. It's just possible that we shoot up and we get to as the 17,300 level. This pattern is an exact pattern symmetry as that. Will that happen? We'll see. But that's pretty much what's going on here. Let's take a closer look on the hourly chart and see what's going on. On the hourly chart, you can see clearly that again. Let me take this out. What's going on? Okay. Let me take this line out here and move this back. Oops, move it back here. Not sure what's going on. Let me see here. Am I having Java issues again on this thing? Maybe I am. So on the hourly chart too, you can see that we have a large move up, a consolidation flag, until we again break down below. I repeat, break down below. Let's say, let me take this line out, below the 200 of 16,892, or let's say we break below this level here. This was the breakout level, one of the breakouts levels. Then we're okay. So that's really what I'm looking at. We should have a bounce around the 16,900 level, or in this particular case, we bounced off nicely from the bottom of this consolidation flag. Let me move on to the S&P 500 and a few of the other indices, so we can see an alternative view to what's going on with these indices versus what you hear in the media. And that's obviously my branding and my trademark, and so far it has served us well over the served me well over the last couple of years, and I'm sure has helped you a lot through navigating some of the more difficult times in the market. And okay, so let me move on to the next chart.